investing in real estate, opportunities and risks. Hello everyone, and welcome back to the X 100% podcast. It's your host, Eddie, here again, and today we're really going to delve into a topic that's crucial for anyone thinking seriously about long-term wealth creation. Real estate investing. Now, when you ponder real estate investing, what images come to mind? Maybe it's those TV shows about house flipping, the idea of being a landlord, or perhaps just a sense of intimidation because it seems like you need so much capital. It's true, real estate isn't like trading stocks online. It's a different kind of investment game altogether, but one that offers potentially enormous rewards. Over the years, I've spoken with countless individuals captivated by real estate. They see the potential, they hear the success stories of fortunes built on property, but they also whisper concerns about the risks and complexities. And they're absolutely right to be cautious. Real estate investing is definitely not a get-rich-quick scheme. It's more of a build wealth steadily and significantly over time strategy, but only if you're informed and strategic. Today, we're going to dissect the world of real estate investing. We'll explore both sides of this fascinating coin, the exciting opportunities and the very real risks that demand your attention. Think of this podcast as your comprehensive guide to navigating this sometimes perplexing, yet profoundly rewarding investment landscape. Let's dive right into the exciting part. The opportunities. Imagine this scenario. You acquire a property, perhaps a condo or a house. You rent it out. Month after month, rental income flows in. That's passive income, pure and simple, and it's a major allure of real estate. It's literally money working for you, even while you're asleep. Think about generating hundreds, or even thousands of dollars each month without actively trading your time for it. That's the power of passive income through real estate. But the story doesn't end with just monthly rent. Real estate offers something incredibly valuable called appreciation. Over time, property values tend to increase. Consider this: land is a finite resource, and as cities and populations grow, the demand for housing and commercial space invariably rises. So that property you bought a few years back? Today, it could be worth significantly more, perhaps even double or triple your initial investment. That's your investment growing substantially, often with minimal effort on your part. Appreciation can come from various factors: general market growth, improvements you make to the property, or even just development in the surrounding neighborhood. And let's talk about tangibility. Unlike stocks or bonds, real estate is something you can physically see, touch, and walk through. It's a tangible asset. In times of economic uncertainty or market volatility, many investors take comfort in tangible assets. Provides a sense of security, doesn't it? Knowing you own a piece of land, a building, something real, something concrete. This tangibility can be particularly reassuring during turbulent economic periods. Furthermore, real estate boasts attractive tax benefits. Governments often incentivize real estate investment. For instance, in many countries, you can deduct mortgage interest, property taxes, and depreciation from your taxable income. Depreciation, in particular, is a powerful benefit. It allows you to deduct a portion of the property's value each year as an expense, even though you aren't actually spending cash on it. These tax advantages can significantly reduce your overall tax burden and boost your after-tax returns. And let's not overlook diversification. Smart investors understand the importance of not putting all their eggs in one basket. Real estate serves as an excellent tool for diversifying your investment portfolio. Its performance often isn't directly correlated with the stock market, meaning it can act as a buffer, potentially mitigating portfolio losses during stock market downturns. You could diversify within real estate itself by investing in different property types: residential, commercial, industrial, or in different geographic locations to further spread your risk and enhance returns. Okay, it all sounds incredibly promising, doesn't it? Passive income, appreciation, tax perks, tangible assets. But hold on a moment. Like every investment avenue, real estate comes with its own set of risks. And it's absolutely vital that you're just as aware of these risks as you are of the potential rewards. Now, let's shift our focus to the flip side, the risks inherent in real estate investing. First and foremost, real estate generally demands a significant initial capital outlay. We're not talking about buying a few shares of a company here. Down payments, which can range from 5% to 20% or even more of the property value, are just the beginning. Then you have closing costs or attorney fees, inspection fees, appraisal fees, lender fees, all adding up. Potential renovation costs can further inflate your initial investment. This high barrier to entry can be a substantial obstacle for many aspiring investors. And here's another critical consideration: liquidity. If you suddenly need quick access to cash, selling a property is not as simple as selling stocks. It's not a liquid asset. The process can take considerable time, weeks, often months, to find a suitable buyer, negotiate terms, conduct inspections, secure financing, and finally close the sale. If you foresee needing ready access to your funds, tying up a large sum in real estate might not be the most prudent choice. Unforeseen personal circumstances, economic emergencies, these can all necessitate quick access to your capital, and real estate might not provide that flexibility. Market conditions constitute another major risk factor. Market fluctuations are a reality in the real estate sector. Property values can decline as readily as they can appreciate. Economic recessions, rising interest rates, overbuilding in specific areas, changes in local demographics, shifts in employment trends, all these factors can negatively impact property values and rental demand. Imagine buying at the peak of a market cycle, only to see property values subsequently decline, leaving you potentially underwater on your mortgage. It's a very real risk you must be prepared to weather. Then there's the property management burden. Being a landlord is often portrayed as passive income generation, but the reality can be far from passive. It can be quite hands-on, demanding, and at times stressful. Think about the tasks involved: advertising vacancies, screening potential tenants, background checks, credit checks, income verification, handling tenant inquiries and complaints, leaky faucets at 2 a.m., noise disputes, neighbor issues, managing repairs and maintenance, plumbing problems, electrical faults, landscaping, chasing rent payments, and potentially even dealing with evictions, which can be legally complex and emotionally draining. You can, of course, hire a property manager to alleviate these burdens, but that adds another layer of expense, eating into your profit margins. Vacancy risk is another significant factor to account for. No tenant means no rental income, and during periods of vacancy, you're still responsible for mortgage payments, property taxes, insurance premiums, and maintenance costs. Prolonged vacancy periods can severely strain your cash flow and erode profitability. Vacancy risk can be amplified during economic downturns when unemployment rises and rental demand decreases. And crucially, never underestimate unexpected costs. Properties, especially older ones, are prone to unexpected maintenance and repair needs. Roof replacements, HVAC system failures, appliance breakdowns, plumbing issues, these are all part and parcel of property ownership, and these costs can be unpredictable and occasionally substantial. A new roof, for instance, can easily cost tens of thousands of dollars. It's essential to maintain a financial buffer, an emergency fund, to absorb these unforeseen expenses without derailing your investment strategy. So, we've covered a considerable amount of ground, haven't we? It's abundantly clear that real estate investing is a multifaceted endeavor, brimming with potential rewards, yet also harboring significant risks. It's not a leisurely stroll in the park. It necessitates thorough research, meticulous due diligence, and a grounded, realistic comprehension of both the potential upsides and the potential downsides. Now, before we conclude, let's quickly recap the key insights we've gleaned today. If you've been paying close attention, you should now recognize that investing in real estate presents compelling opportunities such as passive income streams, long-term appreciation potential, valuable tax benefits, and portfolio diversification advantages. However, and this is a critical however, it also entails risks, notably high initial investment requirements, illiquidity concerns, susceptibility to market fluctuations, the responsibilities of property management, and the inevitability of unexpected costs. The paramount takeaway here is that informed decision-making is paramount. Successful real estate investing isn't a matter of luck or guesswork. It's rooted in making well-informed, calculated decisions. It's about diligently conducting your homework, thoroughly understanding the intricacies of the specific market you're targeting, honestly assessing your personal financial situation and risk tolerance, and formulating a robust, well-defined investment plan. So, is real estate investing the right path for you? That's a question only you, yourself, can definitively answer. My hope is that today's episode has provided you with a much clearer, more nuanced understanding of what this investment realm truly entails. Remember, it's not about impulsively jumping into the deep end without knowing how to swim. It's about taking measured steps, continually learning and adapting as you progress, and being fully prepared to navigate both the favorable periods and the inevitable challenges. If you found this episode valuable and informative, please give us a thumbs up, subscribe to the X100% podcast channel for more insightful discussions, and share this episode with anyone you believe might be contemplating real estate investing. We're also eager to hear your thoughts and questions. Leave a comment in the section below or connect with us on social media platforms. Thank you for investing your time in listening to the X100% podcast. Until our next episode, keep learning, keep expanding your knowledge, and always make smart, well-considered investment choices.